Hi there. In this tutorial series, we'll look at the 5 financial models built into this trading calculator. You should be able to use this calculator for other securities like Forex and CFDs. In this video, we will look at how to use the default fixed units model, beginning with the basic case study, then looking into the advanced features of the calculator. This model is the least complex and is something you could have used a basic calculator to figure out the amount of capital you need to invest for a transaction. But in using this app, besides giving you a position size, this app can also tell you how much capital you're risking, potential profit, and risk to reward ratio. So let's go ahead with the default settings of fixed units, shares, which is the instrument, as opposed to leverage, long, position type, which means you are buying into a position with the goal of buying low and selling high, with a quantity of 100 shares, a price of $10, a stop of $8. That's a stop loss, which is usually dictated by your technical analysis. And let's put $15 for your profit target, which potentially is also dictated by your own technical analysis. Then we click on calculate. We then can see the results below, the repeated inputs. Based on what we have put in, we have a position size of $1,000, which is our total capital invested, a capital risk of $200, which says that if you were to exit at your stop loss price, you will lose $200. A theoretical profit of $500, which is the amount of money you would potentially make if you exit at your profit target price. The risk-reward ratio will help you determine if a trade is worth executing in terms of the amount of risk you are taking. For example, if the risk-reward ratio was less than 1, it means you are risking more money than you would potentially make, which should make you question whether the trade is worth executing. At this point, you can email yourself a copy of the calculation to your email by tapping on Share All Calculations. You could put your email in there and some additional notes as you wish. Then you could do dogfighting either. Now if you tap the back button, it'll lead you back to the calculations page where you can make adjustments to your calculation numbers. At this point, I will start to show you the advanced features of the calculator, which includes shorting calculations as well as brokerage and commissions calculations. Let's say you are trading CFDs and you want to short a certain financial security. Let's choose leverage and then tap on short. If we fill in leverage with 5% and then click calculate, we will see an error. This is because we are still using the same profit and stop loss numbers from the previous long calculation, which assumes you make a profit from buying low and selling high. But in this case, we are shorting, so we are selling high first, then buying low and making a profit from the difference. Since we are leveraged for this case study, let's increase our quantity to 5,000 shares. Leave the price at $10, change the stop to $12, and change the profit target to be lower than the price at $8. Then click calculate. The results reveal that with 5% leveraging, your mark-to-market position size would be $2,500 with a capital risk of $10,000, a theoretical profit of $10,000. The total underlying value of the securities you have short sold comes to $50,000, and for every dollar you are risking, you are potentially going to make a profit of $1, giving a risk-reward ratio of 1. From this results page, you can scroll down and check your previous calculations, and you can actually repeat them by tapping on the circular arrow. Let's go back to our first simple case study so I can show you a few more handy features of the calculator. If you click on the menu item, which is next to the calculate button, then tap on info, you'll see break-even analysis and an on and off switch. Click on. Let's leave the brokerage fee on default, which is yes. Now press the back button on the top left corner. You'll now see two new things. The fee, which is the entry or exit fee. This line gives you the option whether to have that fee in a dollar or a percentage based on your trade. Let's leave it on dollar and put in $30 for your trade. Then done, calculate. From this new input, the calculator factors in the brokerage fee and assumes the same fee as applied on entry and exit. This analysis also gives you a break-even price of $10.60. The price at which, if you sell, you will break even from recouping your brokerage cost. Now, if for some reason your brokerage fee changes on your entry and exit, we also have the functionality for changing the commission structure on both ends of the trade. Go back to menu, info, then change that option of brokerage fee same on buy sell to no. Clicking back. Now we can see that the fee and the exit, you can choose whether you want percentage or dollar on either one of them. Let's change it to percentage on the exit. Put the entry at $30 and 1% for the exit. Done. Calculate. You can see your new break-even number at $10.45. Now if you click on the share all calculations button, that will actually share all of your previous calculations, which you can email to yourself. This ends our introductory video. Look for the other stock trading financial modeling videos coming out in future. Thanks for watching.